Welcome to An Outside View. I'm your host, Dick Zaccaro, and joining me today, I have the pleasure of having my granddaughter, 12-year-old granddaughter, Victoria Quay, and one of her best friends, Maeve Carney. So this is a little different show. Usually I'm the host and I interview my guests. Today is going to be a little role reversal, and I'll be their guest and they'll be the host. And the topic of discussion today is a book I wrote several years ago about the investment industry called In God We Trust, the Investment Business Not So Much. So the girls have a few questions to ask me, and then we'll get into the book and some details. And it should be about a half hour. And I thank you ladies for agreeing to come in and be the host today. All right, so I'm ready for questions. If you want to start off, Victoria, and then you ask me one question and Maeve will ask me another question.
Okay.
All righty? Fire away.
Okay. Tell us about your background and work experience and how you got started in the investment business.
Great question. Okay, so I started off when I was a young man. I worked for the state government for 15 years. And the last part of my state career in government, I ran the Massachusetts State Pension Fund. At the time we started in '87, we had about $1.25 billion assets, and we diversified the entire fund. And then by the time I left in 1990, the growth of investments, it was $5 billion. And today, it's one of the substantial public pension systems in the country. I believe the assets for the state employees and state teachers is $65 billion. And we laid the groundwork and foundation. So the state treasurer back then was a gentleman by the name of Robert Q. Crane. He was the longest standing state treasurer in the Commonwealth, history of the Commonwealth, his name. He retired and left office in 1990, and I followed him and I went into the investment business. So my first role, I was vice president of marketing for a global equity firm by the name of Scimitar. It was owned by the Standard Chartered Bank of London. And I was there for about 2 years, and we sold investment products to pension funds and Taft-Hartley funds, which are union funds, corporate funds, endowments, foundations. And then we were bought out 2 years later, and then I decided to go into the consulting business. So I ended up with John Hanna, the former football player of the Patriots, worked for him for 3.5 years. And then from there, I was a partner with the firm in Boston by the name of Wainwright Investment Counsel. We're also pension fund consultants. We had about 29 clients, public funds, cities and town pension funds. And then from there, I started my own business for 10 years. And I was an independent marketer, and I represented companies all over the world and sold to pension funds, and I was pretty successful at that. Sold about $250 million in assets. So after that, I kind of went into semi-retirement and then decided I'd write a book about the investment industry, and there it is.
Tell us about your book that you wrote.
Okay, so the book, it's a short read, quick read, but basically it's part tutorial, so if anyone wants to consider a career in the investment business, it'll take it from school, what classes you should take to get into the investment business. It breaks out the different jobs by description in the investment business, the marketing from portfolio manager, the salaries of the company, what the lifestyle is, what licenses you need. And it's quite interesting. That's part of it. The other part is sort of autobiography. Talks about my professional career, how I got in the business, so I just explained to you, and how the business has changed. And then I even I give some really good investment tips in the book, Fundamentals of Investing. And I also talk about a couple scandals over my career that I witnessed, and that's henceforth how the name came, In God We Trust, the investment business not so much.
Okay. Can you give the viewers some basic advice about investment advice to follow?
Sure. Okay, it's not really rocket science. It's basic common sense in the investment market. So there's a couple chapters here that I talk about that. So for the viewers, I would say number one, the most important asset in the investment business, important that you want to focus on, is asset allocation. What that means is there's an old adage, you don't put all your eggs in one basket, because if you trip and fall, what happens? The eggs break and they're no good to you. So you want good diversification. What I mean by that is you want different exposure to the different investment vehicles like stocks, bonds, real estate, private equity, monetary commodities you could invest in a little. So when you combine all these asset classes together, you want low correlation between the asset classes, which basically means, let's say bonds are up, stocks are down, you're going to get that happy median. So you try to shoot for maybe a 10% annual return year in, year out. So that's what the low correlation is. So asset allocation, like I said, is the single most important component of investing. So let's say over 25, 30, 40 years, if you're diversified, that accounts for 95% of your return over the years. That's one tip, most important tip. The second tip is you do not try to time the markets. It's very risky to time the markets. There's not too many successful money managers that are called market timers. And for example, in the book I write, if you invested in the S&P 500, that's all the big stocks, big 500 companies, the blue chip stocks, all the big companies out there, oil companies, financial companies, whatnot. So if you were out of that market in 10 years, just 10 days out of that market, it could substantially negatively impact your return. You wouldn't believe the numbers. I think it was like maybe 5% that could impact your returns, annualized returns. So that's number two. So diversification, do not market time. And the third one, believe it or not, a mistake that a lot of investors do, they get too conservative in their approach. So they're not diversified. And what happens when you're overly conservative, investment, the CPI, which is Consumer Price Index, or inflation, erodes your investment earnings. So you might be making, like if you put all your money in the bank, you're only making, let's say, 1% interest. Well, inflation could be 3 or 4% interest. So that's a minus 2 or 3 return after inflation, erodes your investment earnings. So that's basically the three key components of investing. Again, I could get into standard deviation, Sharpe ratios, risk versus return, rewards, and all that stuff. But a good financial advisor, I would recommend to see one, and they will structure, depending where you are in your career, if you have a lot of years left to work, you want to get fairly aggressive in your investments, and as you get older, you want to wind down that exposure to aggressive asset classes. Then you get a little more conservative because you don't have many years to sustain that volatility. I know it sounds complicated, but it's common sense again.
Tell us about the controversial book cover design and the meaning behind it.
Yeah, a lot of people comment on this cover. So on the back, I have some quotes in the investment business based on my career, a picture when I was interviewed about the book in the studio, and some revelations here. But the front of the book is what she's talking about. So you see, in God we trust, the investment business, not so much. You see Greed Street and Wall Street. Wall Street is the financial capital of the world in New York. I've been there to the stock exchange, and if you ever get the opportunity when you're older, you should see it. It's like crazy. The first time I walked in there with a bunch of my friends, the stock market opens up at 9 in the morning, and then the orders come in from all over the world, and there was like chaos. I actually saw a fist fight between two guys on the exchange floor arguing over an order. It was wild. So what that basically means, that's Benjamin Franklin on the cross, and he's covered with $100 bills. And that's the sign E pluribus unum, and one monetary system that stands for. And the reason I put him on the cross, because we all know he's on the $100 bill, so he's atoning for the sins of Wall Street and the financial greed. So we did that. My son actually, your Uncle Nicky, designed that cover. He thought it would make a lot of sales with the controversial cover. So a lot of people have commented on it. And by the way, if you go on, I think one of your questions, what's your next question? Might lead into what I'm going to say.
How many copies have you sold and where?
Okay, so copies, it's a good question. I've sold copies all over the world. I've sold them in Japan, China, England, United States. So this book was self-published. There used to be a company out of Seattle, Washington called Create Space. So you would give them your formatting of the book. They would reformat it, make sure, edit it for you, make sure the grammar was correct, proper English. And then you would give them the cover. They put the book together. They charge you so much to do it. And then you get the book. So it's advertised on Amazon.com. You can get the softcover book, which I have in my hand here, about 65 pages worth. I believe it sells for a little under $10, like $9.98 per book. Or you can go on Kindle.com on Amazon. That's an online service where people sell their books. And that's the version where I think it's $3.95 or $3.98, something like that, where you can read it online, so it's cheaper. And then I get commissions and royalties based on book sales. But the question you asked me is kind of, I'm looking into it right now. A few years ago, CreateSpace was bought out by Amazon publishing arm called Kindle Publishing, KD Publishing. So before, CreateSpace used to give me a quarterly sales report, and it would show me how many books I sold for that quarter, 3 months worth, and my sales, the commissions. And a couple of years ago, they stopped sending me this report. So I'm looking into it now, and I had a conversation with the new publisher that took over CreateSpace. They said I had to reformat it again with them and provide them with the Word documents and the cover, and then I would get sales reports again. But meanwhile, I've sold a lot of books, so I haven't got those commissions yet. So I'm trying to work it out with them where I get paid for my commission. So any you authors out there that were self-published, maybe or maybe not, you might be going through the same problems I'm going through now with Amazon and Kindle. I don't know. Hopefully, I'll resolve it, and I'll get my royalties once again. So I can't really answer how many copies I've sold, because I don't even know. But I know I sold a lot because a few of my friends said, hey, I just bought 12 copies of the book. Matter of fact, your dad, he's in the union, electrical union, and the other day he sent me a picture of one of his coworkers with his hard hat on, and he was holding up the book and said, look what my coworker bought. It was my book. And by the way, on Amazon, for you people interested in ordering it, you can read the reviews. There's probably about at least a dozen reviews on the book from people that read it. Most of them have been positive.
How can people get a copy of your book?
Okay, so right now, the way you would go on is if you Google Amazon Publishing, and you Google, all you have to put is In God We Trust, The Investment Business Not So Much by Richard J. Zuccaro. Then it'll come up, it'll give you the reviews of the book, it'll highlight some of the pages in the book, and then you can order the soft cover, again, just a little under $10, I think it's $9.98, or you can get the electronic version online for $3.98. So that's how you can get it.
What are you doing now? Are you still working and writing anymore?
Yeah, another good question. I'm semi-retired. I'm out of the investment business. I've been out now for quite a while. I work at a golf course up the street. One of my passions is golf. So I run all the tournaments at Wentworth Hills Country Club. and work a couple days a week seasonal, and I get to play golf with your brother. William is a big golfer, as you know. And the other part about this book too I wanted to say is been invited for a few book signings too. One was right in Walpole, down to the Walpole Mall where Barnes and Nobles was. So I showed up there with a couple other authors, and I did a book signing. And you asked me if I write anymore. Writing is a passion of mine as well. A couple months ago in this very studio, I interviewed a friend that I grew up with in Brockton. She's an author and historian and has a passion with Native Americans. I'm part Native American, so we did a show on my family heritage in South Dakota on the reservation. So my great-great-grandfather, it was about his book he wrote called 50 Years on the Trail. And for you viewers out there on Netflix, I don't know if you saw the new series, American Primeval. It's unbelievable. And it was the spitting image of my great-great-grandfather's life. So his book was about his life with the Oglala Sioux, and married my great-great-grandmother that was 100% Sioux Indian. So after I read the book, it was fascinating. I said, you know what? I'm going to write a follow-up to his book. And I published a manuscript. It's in the Congressional Library in Washington, D.C. So I put 50 Years on the Trail, the Forgotten People. So I write about what the Native American lives were like back then. This was in the 1800s, middle 18 to late 1800s, and it transcends the life of the Native American to today and how their lifestyle is today. So that's another manuscript that I published. Okay, so any other questions? I know we're done with your formal questions. What else would you like to know?
How long did it take you to write this book?
How long it took me? Another good question. So I try to piece together all my collective ideas over 30 years in the investment business based on my memories and whatnot. And it probably took me, I'd say, a good month. I mean, writing and like reading is, you got to be in the mood for it. So sometimes your thought process is better than other times. And I jot down memories and say, what do I want to say about that memory? And I'd write about that. So about a month, and then it took me, I believe, another month for them to process my book and reformat it, go over the cover designs, edit it. So all in all, I'd say about 2 months it took me. And I can show you, I have some good pictures in the book here. I have the efficient frontier on one page. That measures risk versus return and the optimal level where you want to be. Again, a couple of the scandals I talk about in detail. And there's an old adage in the investment business. I've seen thousands of money managers from all over the world come in and make presentations to us and my clients. And there's an old adage, this is key too. They tell you about a product, and if it sounds too good to be true, it probably isn't. That's an old investment adage. And also, for you salesmen out there in the investment business, I write on the back here, one of my bullet points is, you know, if you have a couple good relationships, you can make a real successful career out of the institutional business. And it takes a long time to establish that trust. People got to get to know you. You go out and spend some time with them. Once they know you, then the good word gets out that you're a reputable guy, you got a good product.
Okay.
And then another adage I'd say with the salesman, the marketing salesman out there, there's an old saying, if you never ask for the order, you'll never get it. So you got to be aggressive out there. And let's say you're after 10 accounts. If you're successful in getting 1 or 2 of them, that's 10-20% of the accounts you're marketing to. That's can make a nice career out of that.
Okay. Was
Any
there
other-
any major problem you ran into?
Yeah, I mean, the business has really changed now since I was in there. It's much more technical, and The SEC came in for good reasons. A couple of problems you're referring to, scandals that I've seen, witnessed. One in particular, like I just told you, if it's too good to be true, it's probably not. One of my clients, he was the executive director of a pension fund out in Chicago, and I went out to meet with him. He was doing a custodian search. That means where they house the assets for the pension fund. And I said, you have to diversify your fund a little better. Right now, you just have it in a money market account, which is not good. So I developed an asset allocation plan for him, and he wouldn't do it. And then I lost communication with him. And lo and behold, what happened, some money manager came in from overseas and promised them like 21% overnight in a money market account, which is unheard of, other than back in the 80s when Jimmy Carter was president. Inflation was rampant and you could get 21%. So once again, it was too good to be true. And guess what? The guy absconded with the money, and the pension fund lost about $18 million. And then there was one other incident. Had a very bright guy. He had a PhD from MIT. And a couple of my clients, he did a currency overlay, which is hedging against the currencies fluctuating all over the world. So, you know, you have the United States dollar, you have the Japanese yen, and other euro dollar. So he was putting a hedge, so trying to minimize the loss of the currency's fluctuations in the different markets, worldwide markets. And he was supposed to do what they call a neutral hedge. So it's sort of like you're betting that it's going to go up the dollar, and then you're betting in options that it's going to go down a little. So you hit that middle return that I told you about. That's what you strive for. Well, he was bullish on the dollar, which means he thought the dollar was going to go strong. So he just put a hedge on it that it was going to increase without protecting the downside. Make a long story short, we found out that he lost about $25 million of our clients' money. But thankfully, we had insurance with the custodial bank, so they were pretty much whole afterwards. So those are probably the two biggest problems that I encountered over the years in investing. So you have to really do good due diligence on investment managers. So you'll have a portfolio manager that runs the money. You have analysts that check the background of the companies. You have the consultant that I was doing, advising the client. And once again, now see how good you girls are here. What are the three important things in investments? Do you remember what I said? Remember I said, don't put all your eggs in one
I
basket?
don't even know what you're saying.
Don't put all your eggs in one basket. Diversification.
No, if it's not
If it's too good to be true,
it's not
it's probably
true, or
not
something
true.
like that.
Exactly. Very good.
A.
I'll say once again to recap the three. If you get anything out of this show at all in investing, the 3 points, key points. Diversification, asset allocation accounts for 95% of your return over the years. So that's the number one key ingredient to successful investing. Not all your eggs in one basket. The second one, market timing. Remember what I said about market timing? You try to time the markets, you won't be a successful investor because you're missing out on opportunity. Some people, the retail versus institution, a retail person will want to liquidate their entire portfolio, so they could be in stocks and bonds and then liquidate 100% into cash, and they miss out on the market rallies. So no successful market timers. And the third, do not get overly conservative in your approach, because once again, if you put all your money in the bank, it may be safe up to a certain amount. I think the FDIC insures up to $100,000 of your money in the bank. And what happens there, you're too conservative getting 1%. Meanwhile, the bank's loaning out your money at 12%. That's how they make money and build banks all the time, insurance companies. So if you're overly conservative, inflation, again, which is a cost of buying eggs out there, gasoline, clothes, food, If that increases 3 to 4 to 5%, and you're only getting 1% on your return, you're losing money. Well, you're not losing money, but it seems that you're spending more money than you're gaining on investments. Okay, we only have a couple more minutes. Again, I appreciate you girls coming in here. And maybe one day you'll be in the investment business, right?
Yep.
Or maybe
Yeah.
you go into communications. It's a beautiful studio
Yeah.
here, isn't it?
Yeah.
Yeah, it is.
Did you enjoy being the host?
Yeah.
Yeah, well, maybe we'll do it another time. All right, so once again, I just want to explain the book again. It's called In God We Trust, The Investment Business Not So Much. It's available on Amazon.com and Kindle.com. You can get a copy, and it takes probably maybe, I'd say you can get overnight delivery with Amazon if you pay extra money. So I think it's $5 more. They'll deliver it to you the same day. And I look forward to hopefully some more sales, and hopefully I'll square away what's going on with the new publisher. All right, girls. Well, again, we're right on the money here. We've got just a few minutes left, but I think you've asked me pretty much all the questions you wanted to ask, right?
Yeah.
Anything else?
Nope.
Okay. So on that note, I'm going to sign off on an outside view, and today I was the guest and you were the host. So until the next show, I want to thank all the viewers for tuning in, and you can see a write-up probably next Thursday. Walpole Hometown Weekly is going to do a nice article on us, and you guys will be in the paper next Thursday. All right, and once again, Walpole Media Corporation does a fantastic job. They got a professional studio here. I love that design over there, the mascot for the high school sports team, the Timberwolves. Maybe you girls will be, what, a couple more years you're in high school?
Yep.
You gonna play any sports for Walpole High?
Probably.
Yeah.
What do you think? Lacrosse?
Lacrosse.
and
Soccer? What else?
Lacrosse and soccer. Well,
Yeah.
not for me, but for her.
And you have your dance recitals here too, right? In May,
Yeah.
you and your sister? Yeah, that's coming up. When do you know when the date is?
June something.
When? June?
June, I think.
All right. Well, I'd like to thank Pete Farrell once again. He does a great job, and maybe when you're here a couple of years, you can sign up for his class.
Yep.
You can learn how to edit and learn how to do communications and everything else. It's quite an interesting area.
Yeah.
Okay, girls. Well, thanks again, and till next time on Outside View. Have a great day.